Hello everyone, welcome to Midas Letter Live. We're here for another show on Friday, December 21st. I'm with my co-host Ed Milewski, who's on the show today. How are you, Ed?
And we've switched chairs from yesterday.
Yes, we have switched chairs from yesterday. I am hosting the show. Ed is my cohort today. So Ed, what are you looking at in general?
Well, you know what? I'm focusing on the S&P. I'm like this S&P 500. I'm looking at the 10-year bond rate. I'm looking at the price of oil and commodities in general. I'm getting a sense of overwhelming this is a serious correction, right? The S&P took out that little resistance level, support level, and then it broke it, and it's been down every day since.
Yep. Yeah, coming up on today's show, we'll get back to that in a sec, Ed. There's been some key levels broken here. But first, coming up on today's show, 3:05, we're going to have the headline news with Ricky Gerwitz. At 3:15, we're going to have a very insightful interview with Smoke Wallin, who's going to talk about the hemp bill in the U.S. and in Kentucky as well. And at 3:30, we have Dmitry Zaytsev, our star millennial options trader extraordinaire. At 3:45, Mitch Baruchowitz, hope I pronounced that correctly, Mitch, will be speaking on the U.S. MSOs and what his thoughts are for how they might act in the first quarter of 2019. At 4 o'clock, we're going to have the market close, so market banter with me and Ed. 4:05, the best and worst predictions on Midas Letter, which is all on me because I wrote the articles and I write a lot of the content on the site. So we'll go through what I got right and what I got wrong in 2018. And finally, at 4:20, we're going to have the best of features. So the best of some of the features and segments that we've done in 2018 to date. So Ed, again, revisiting the market. I know, walking into the office today, you had a lot of angst, as a lot of investors about where the market's going. Some levels have been broken. The S&P yesterday broke a key level, or either yesterday or 2 days ago broke that key February low level from the volatility impact that was in February, so they're at new yearly lows. And today, NASDAQ broke new yearly lows on the downside as well. So what are your thoughts on that and the commodity complex like oil and so forth?
Yeah. Well, I got the S&P chart up right now. Maybe we can get that on the screen. Look, we've got now
the S&P 500?
Sure. Yeah, this is the S&P 500, and we've got, I'm just going to, 1, 2, 3, 4, 5, 6, 7, 8, 9 red candles in a row. And I don't know if you ever looked at this, Ben, but they say when you get to 10, 11, 12 in the same direction, you're talking about extremely rare events, and a counter event's going to happen. Have you got the chart up, or is maybe my NDI?
Oh, there it comes back.
Okay, so there we go. So just a second,
this is a daily.
This is a daily. This is a 3-month chart, and you can see this is where we were before the thing rolled over, and then we get into October. And then look at this. We're now at 24 something, and we came from 29 something. That's 500 points. Quick calculation: 500 and 2,900 is in between a fifth and a sixth. So we're talking 17-18% correction.
Yep.
In those months.
It's been nasty, and
it's vicious.
Anecdotally speaking, I can say that when it comes to about 10 or 11 days down, very rarely, I don't think I've ever seen stocks actually go down for more than 11 days without some bounce. It happened to Aurora Cannabis actually this summer. We wrote about it, and we'll get into that a little bit later as part of our one of our worst predictions of 2018, where we try to predict the bottom. That will be later on. But for now, we're going to go with the news with Ricky Gerwitz and follow up on your points later, Ed.
All right.
Thanks, and here are the headlines moving markets today. HEXO Corp has filed an application to list its common shares on the New York Stock Exchange. Listing of the shares on the NYSE remains subject to the approval of the NYSE and the satisfaction of all applicable listing and regulatory requirements. Liberty Health Sciences Inc. has announced the launch of Zetient Labs. It says Zetient will produce a line of hemp-based CBD products, nutraceuticals, and vitamins that promote energy and focus for wellness seekers. BlissCo Cannabis Corp reported financial results for the third quarter and 9 months ending October 31st, 2018. Net loss for the quarter was 0.7 million Canadian dollars and $4 million over the first 3 quarters. They also reported a loss of 1 cent per common share over the third quarter and 8 cents since the start of the year. They received a sales license from Health Canada to sell bulk cannabis and prepackaged, labeled, and tested cannabis products to medical patients and to the provinces. Dixie Brands Inc. says it's introducing a full line of cannabis-infused products to Canadian consumers. The company is reviewing the proposed regulations for edible cannabis, cannabis extracts, and cannabis topicals introduced by Health Canada on December 20th. The company anticipates being ready to launch a fully compliant selection of products when their sale becomes legal in Canada by October 2019, including THC-infused beverages, THC and CBD topical products, CBD-infused supplements, as well as other delivery formats, subject to final Health Canada approval. And that's your news for today.
So Ed, now we're going to take a look at the charts for a few minutes here, now that we heard the news with Ricky. She always does a great job, by the way. So I want to revisit your point, Ed, about what you're seeing in the market, because from my vantage point, and we had a couple questions on yesterday's air about whether we would buy in right now, and I wasn't quite comfortable personally with doing it. It seems to be, so we had our second and fourth biggest volume day of the year, and to the downside, and there was nothing that indicated that this wasn't a catching the knife point right now, and I think today is borne that fact. We haven't seen really anything rebound in the commodity complex or anything like that. Oil still remains down. What are your thoughts?
Maybe I'm grasping at straws here, but when I look at I'm going to put up a 10-day chart, and you know I'm convinced, and this may sound that I'm not a conspiracy
theorist?
Not at all. But look, we this is the wrong chart, but I'll put up a 1 month. Yeah. So we've got the market looking like it's closing, like the bottom part of that candle looks like it's closing right at yesterday's lows, but it's not. Sometimes I look at that and I think I'm looking for something to sink my teeth into, and what I'm saying here is the bottom here. No, I can't. Okay, here we go. So this, if you look across there, it looks like, we're still within yesterday's range, even though we rallied quite a bit. Somebody pointed out today that there's only now 18% of the stocks on the S&P over their 200-day moving average lines. This is epic. This is historic. And the more I think about your comments about the balance sheet and what the Fed's doing, and the correlation between, the debt levels have ballooned from under $1 trillion to $4 trillion, or about
Fed balance sheet raising from 800 billion to 4.5.
5
billion.
times, right?
Yeah, from 2007.
5.5 times, and in the markets. So the money seems like all that money has seemed to found its way into the market, because the NASDAQ was 750, and it didn't reach 2,900. That's 4 to 1, like almost 4 to 1.
Yeah, I would agree on a macro level. If you were to look, the market is structured in different layers of catalysts, right? You have individual market catalysts, you have different economic catalysts on economic numbers, and then you have liquidity that the central banks are adding at the high end of the hierarchy. If you were looking at the high end of it, at the Fed balance sheet and the contraction or surplus of money supply, it seems like the money supply, they're definitely contracting, they're definitely shrinking their balance sheet, and that's taking liquidity out of the market.
Yeah,
but that's at a very, very macro level. So I would agree with you that on the way up, you can see the Fed expands their balance sheet, and the markets basically go in lockstep. So the fact that it's coming down, if there is no reversal, is a little bit concerning. How much it plays in what's happening right now, because it's such a long-term macro outlook, remains to be seen. But it's sort of like the tail wagging the dog sort of scenario.
2 months ago, I guess maybe 10 weeks, something like that, oil hit $76, and I remember thinking, wow, $76. I mean, this is great for the oil industry, and there was comments about $100 is in the scope, like they're predicting $100 oil. 10 weeks later, it traded us, I think, low today around $45.50. So that's a $30 drop on 75. So 3 on 7.5 is about 33%. I think that's more than a third.
It's a big move, and at first, I don't think anybody, Donald Trump was jawboning the Saudis a little bit to try to bring that down, and it's almost a case of be careful what you wish for. He was jawboning it. I think a lot of people attributed the initial impact to that because he wanted to obviously help the U.S. economy and help the corporations that rely on production and the cost of oil, and now it's kept going. So. I mean, some may interpret that as being, worrying for the economy, but
if you had one word, if you said what was the reason for what we saw the S&P straight up for years, right? And now we've had this monster correction. I think the word that sums it up is debt. I think it's, you talk about consumer debt, you talk about debt at every level. Like it's just debt, right? So it's historic and it's epic.
It's there, personally speaking, I think it all comes down to whether we're going to have a recession or whether it's just going to be a global slowdown with the U.S. going into slow growth period. I think that's the best case scenario. But I think at this point, everybody agrees that there is going to be a slow growth period, and now it just. In terms of cannabis investors, it's just a matter of how do you react to that. And Dmitry came on air earlier today, and we've been pounding this narrative too, is that investors shouldn't be afraid, but entry points are going to matter now. Entry points are going to matter because if you get the wrong entry point, it will not be as forgiving. And don't over leverage yourself. If you don't over leverage yourself and get good entry points, and able to ride out the the bottoms and the waves of what happens in the economy, because there is no guarantee that recession is coming at the end of 2019. Slower growth is, I think that's pretty much guaranteed. But
Have we got time for one more chart here?
I believe we do. We have a couple minutes, Ed. What would you like to show us?
Well, I got weed up here. Okay, Canada's biggest marijuana company by market cap, and look at this peak here. That was when we went legal, okay? $70-some, $74, $75. Today, we're at 35 and change, just over half, and that's in what? That's in 9 weeks. That's
a big move.
I mean, look, and I'll tell you, the one thing about being around markets for a long time. If you don't have any money in the weed space, okay, that's good. But if all your friends do, you're going to notice a change in their personalities. Like if they're loaded and they were sort of euphoric and optimistic back when it was at $70, the tune's going to be a little different right now. And it's pervasive, right? The trouble with falling stocks, like a rising tide lifts all boats, and
Yeah, I mean, anecdotally on Twitter, I have about 1,800 followers, and anecdotally, I can see that the activity is going down. I can see that more people are not engaging right now in terms of messaging, in terms of tweeting, because quite frankly, nothing is working right now, and most people are long. Some people are perhaps holding positions that are higher levels. So it's a little bit of it's a tough period right now, no doubt. But people have to realize that the cannabis market is down over 40% over the last 3 months, and hopefully we get that bounce back in Q1 2019. We're going to talk to a guest later, and we're going to ask him that very question. So right now, coming up, we had an earlier interview with a hemp expert. His name is Smoke Wallin, and he has his own company, Vertical Enterprises, and we're going to speak to him right now. 5, 4, 3, 2, 1. Welcome everybody. We're here with our special guest named Smoke Wallin. He is the president of Vertical Companies, a California cannabis company, and he joins us from Bowling Green, Kentucky today. Smoke, how are you doing?
I'm well, thank you. Glad to be here. I'm actually on a road trip to see my family and happen to be passing through Kentucky, so stopped the side of the road to do the interview.
Well, that's a very apt location because I understand Kentucky is pretty much the home of hemp. It's a huge market in there, and I was wondering if you could tell the audience what the Farm Bill and hemp production especially means for your home state of Kentucky and for the national landscape in terms of how it's going to affect cannabis stocks.
Yeah, absolutely. I mean, the Farm Bill is monumental in terms of what we can do now with hemp, and the derivative product CBD is obviously the hot topic of the day. But what the Farm Bill basically did was it took what was a pilot program in 14 states and took that away and made it a 50-state agricultural product that can be grown anywhere in the country. Now, it hasn't solved all the issues. There's still quite a few regulatory hurdles that have to be worked through. The FDA has come in yesterday and asserted that it has still has purview over products that are derived from cannabis and hemp. But that being said, it's a huge step forward for the industry, and it's a huge move for both the farm community who would like to grow it, but also companies like ours that want to take the product and turn it into brands and put it into stores and all kinds of accounts and bring it to the public.
Now, what do you think this means for the price of CBD oil? I mean, to me, that's one of the better narratives about this whole story. Because right now, I think CBD oil, a lot of people would like to try it. There's a lot of therapeutic benefits to it. Interests a ton of people, but the price is a little bit disqualifying to a lot of people. I know 30 milligrams might cost anywhere between $80 and $120 American. Now, do you foresee CBD oil with the mass cultivation of hemp hemp fields and crops? Do you think the prices are going to come a lot lower as we head to the back of the year, next year?
I think they're gonna come down over time, but to be honest with you, we're gonna see a lot of hemp growing in the farm side, but there'll be a bottleneck at production, at processing. And that's one of the things that we're investing heavily in, is so that we can take the raw hemp, dry it quickly, and then process it into CBD oils and other derivative products. Until that happens, so there's enough capacity and an ecosystem that's built up to process large quantities of hemp, which there is not today in the U.S., the price is still going to be relatively high. Now, that being said, a lot of the CBD products that were coming from that you see in the marketplace were coming from overseas up until now because of the prohibition against growing hemp and extracting it here in the U.S. And I think going forward, you're going to see U.S.-grown hemp dominate the space, and it's going to be a very positive thing for U.S. farmers, but also people like us who are creating brands. I don't mind my cell phone coming from China, but I don't really want to consume products from China in my body. So I think we have a great argument to bring U.S.-grown hemp products to market. And yes, over time the price will come down, But again, the bottleneck is this processing side of things, and until that's solved, and it's going to be solved with a lot of capital investment.
Okay, so I guess what I'm hearing is that prices may not necessarily come down in 2019 all that much, but going forward, perhaps 2020 and beyond, when that feedstock really gets accumulated, then that it'll be more of a gradual decline in prices. It's not something that's just going to drop 50% next year or anything like that. It's more of a time delay on that.
For sure, it'll take some time, and look, it takes years to build out an industry, right? So it's not like it's gonna overnight. There's gonna be a big ecosystem that's built out. That takes time. A lot of money is gonna come into the space, and the other thing is, think about this. Right now, up until now, you were able to get CBD products at maybe convenience stores, certain spots. You were able to order it online. But there was a very unregulated market, and because of the gray and unclear rules state by state, you have a lot of products that consumers didn't know what was in them. So what's happening with this regulation is there will be visibility of seed to sale, what's the product, where the product came from, and what's in the actual bottle, and proof of testing of what's actually in. Because it's very important for the industry to mature, that consumers become confident that what they're getting is real CBD at the quantities that are being set on labels, and that they know that they can rely on whatever they're buying. So, for this to go mainstream, which we believe it's absolutely going to, a regulatory infrastructure led by this Farm Bill is absolutely essential.
Perfect. Now, some mainstream analysts are predicting the market to be anywhere between, say, 20 and 25 billion in 2020. Do you think that's a realistic target, or do you think those estimates are a little bit unreachable or aggressive at this point in time?
I don't like to give an exact number. I know it's going to be billions of dollars, right? And, but you think about it. Right now, Walmart, Walgreens, CVS, Target, Marriott hotels, all the mainstream large-scale places where people buy their product or consume different things, spas and things, have not really carried CBD because of the regulatory prohibition against it. So we have no idea yet what the real market is going to be, because so many outlets that could carry it have not. It's in the tens of billions. I don't think it's a stretch to say it's 20, 25 billion. Whether it gets there by 2020 or 2022, that's your guess is as good as mine. But I think it's absolutely going to be many billions, and it's going to grow very quickly.
Okay, so where are you with your company in terms of branding? You were speaking earlier that Vertical Companies intends to brand CBD products. Are you ahead of the game in that regard, in terms of, compared to other companies with branding those products? Have you been sort of seeing the Farm Bill passage as inevitable and anticipating your next moves in regard to feedstock capacity upgrades going into next year?
Yeah, so we made a bet early this year and invested heavily here in Kentucky at Western Kentucky on a hemp grow. We just harvested 100 acres of hemp in October. That's produced almost 100,000 pounds of biomass. That's sitting in our 90,000 square foot facility just down the road from where I'm sitting. And we're in the process of processing that into CBD oil. Now that'll be probably in the neighborhood of $20 million of CBD oil at wholesale. But we're putting that oil into our branded products. So I have brands that are rolling out in January. I've got 2 brands going into 1,000 convenience stores, at the beginning of the year as a initial test. And we had put those wheels in motion 6 months ago in anticipation of this Farm Bill passing. Now, I didn't know for sure, but we believe that it was inevitable. It was going to happen eventually. And if it didn't happen now, we would probably hold back on some of our plans. But we made the investments early, and we do think that gives us the leg up. Right now, we're working with farmers throughout Kentucky and other surrounding areas to lock up probably about 5,000 acres of hemp production for 2019, which, it once processed will probably be in the neighborhood of $1 billion of CBD oil that would go into various manufactured products, some of which will be our brands, but also think about the other mainstream companies that are probably going to get into this: Coca-Cola and Nestle and PepsiCo, and a wide range of other consumer packaged goods companies that have brands that probably are going to come out with a line extension that have CBD version in it. They're not going to probably do it in January, but I think it's going to happen fairly quickly, and we want to be that provider to them, a large-scale, predictable ingredient provider to those guys, and then also building our own brands that we're putting in stores directly.
Now, are you a public company right now, Smoke, or are you still on the private market, or any plans to go public, if that's the case?
So today we're a private company based in California. We expect that with the Farm Bill passing, that all of our hemp and CBD assets, that we'll be able to take that into its own entity, which we're calling Vertical Wellness, and that entity has we have every intention to bringing that out to the market, in early 2019. We think that the timing's right, and with the Farm Bill passing, institutional capital, hedge funds, large corporations that have been prohibited from investing in the space in the U.S. will now be able to invest directly in the space. So we think we're in a really good position to attract capital and to scale this operation as this thing goes mainstream. Our cannabis assets, which are primarily in California, but also in Arizona and Ohio, and we have some interest in some other places, but primarily in California, that will stay private in the short term because of the federal prohibition that still exists. But I do agree with Acreage's CEO, Murphy, that there's a good chance that federal prohibition will be repealed in the next 12 to 18 months. And in that case, we would be in a position to take that public. But right now, our hemp and CBD assets are really what we're thinking about from a listing kind of standpoint on the NASDAQ or other U.S. exchange.
Okay, terrific. Well, great inaugural introduction to your company and your visit on Midas Letter. Well, it's a story we'll be watching for sure. Thank you so much, Smoke, for coming on air.
Thanks for having me. Have a happy holiday.
You as well. It's a great interview. It's good to know more about the Farm Bill and how it's going to affect marijuana stocks.
He seems like a very knowledgeable guy. Like, I've never met the man, but seems like he knew what he's talking about. I mean, he's thrown out some pretty big numbers, though, for the industry, hasn't he? Like,
yeah, and there's a lot of feedstock coming his way, and it was very insightful about how Smoke believes that there's a bottleneck. So it's not even going to be necessarily a feedstock issue when it comes to CBD oil production and prices coming down. It's a bottleneck issue. So hopefully the United States they build extra capacity and extra processing capacity and solve that issue so that CBD oil prices can come down and more people can enjoy the benefits of that.
Yeah.
Now moving to the charts, Ed, I know you want to talk about a couple other
charts.
Yeah,
I think if I'd like to put up Afria. Again, we looked at.
So do we want to go there, Ed? Do we want to do the Afria thing? It's not looking good right now, but.
Here we are, down 60 cents to 644. There was a reaction low about a week ago of 650. It rallied there. Look. There's a gap here.
So you're looking at the daily.
Yeah, that's a gap. This is a 6-month chart, and that's when all hell broke loose with that report. And since then we've dropped dramatically. And look at the big volume, 5 days in a row of 30, 40 million, 20, 30, 40 million shares, plus what's trading in the U.S. We had a nice contra trend move, but every high.
Sold into.
It's like Dan the chart man. He says when your highs are lower, and so we're seeing that, and today it's starting to pick up steam. So,
well, to me it looked like it was sort of in a consolidation pattern. So it was making new highs, higher lows and lower highs on the hourly chart. So I think there was a lot of hope that 485 on the American side would hold. Unfortunately, that doesn't appear to be the case. The NASDAQ 100 index keeps capitulating into the close so far. So we'll have more at the closing session comments, but unfortunately, it looks like the low might be taken out. It's not confirmed on an hourly basis yet, but we'll have more at the end of the show. Right now, earlier I spoke with analyst Dmitry Zaytsev, our millennial options wonder kid, about what to expect in Q1 2019. Here's what he had to say in that interview. We want to welcome Dmitry Zaytsev to the program today. Dmitry, welcome.
Happy to be here.
Okay, I guess we're going to start out with talking about, or trying to get your feelings about the macro environment for stocks in general, and also the cannabis market. Obviously, we've had a lot of capitulation lately. How do you see this playing out into the Q1 of 2019?
Yeah, so I think the market generally has been marked by lower lows, supports breaking, and generally a really pessimistic environment. And this is, we've chatted before with James and others on this program, but it's really important to have a trading plan and have a lot of cash going into these kind of scenarios, because look, there's opportunities left and right, not just in the cannabis market, but globally speaking. And so generally what you've seen is a lot of fear, a lot of liquidity being pulled out from the market, and the Fed not really being as cooperative as some people fear. I think this is providing and will provide a buying opportunity, and I think it's time to start looking at names you're interested in and start thinking about some long-term positions.
Okay. So I know in our writings and my appearances on the show, I've been really stressing that easing into positions in the cannabis space, for example, or growth stocks in general, is what you want to do. It doesn't appear that we're in a market environment that's going to be very forgiving for bad entry points. Mm-hmm. Now, would you agree with that? And also the over-leveraging aspect. Retail investors tend to over-leverage. Now, would you agree that easing into positions, getting good entry points, and not over-leveraging on, if you're investing in growth stocks, is the key to 2019, surviving whatever may come?
I think it's a psychology thing. So like you said, a lot of retail investors and their studies on this, they go all in on the weed stocks or on high growth, Shopify, whatever, FANGs. And generally they say to themselves when things are going up, I'm in it for the long term. The reality is when you're putting 100% of your money into something and it goes down 50% or more, you start panicking, and especially if you didn't do your due diligence and you really weren't there for the long term, you don't really know what you're holding, why you're holding it. So I think generally speaking what you're saying, slowly easing into long-term positions, absolutely. If you're the way you should be doing it is honestly just setting a bunch of orders and good till cancel orders and just forgetting about it if you're really in it for the long term. And if they hit, they hit. You check every once in so often and you get on with your life. Otherwise, I would say if you're trading it, you have to have a trading plan. And like an example today, like we just chatted about earlier, I thought maybe Canopy bottomed out. Looks like it was at the bottom of the range. I bought some. It went up. I'm like, oh, looks like I'm right. Rolled over, it broke the support, I covered. So I have a lot of cash. There's lots of opportunities out there. I'm not just going to throw myself into this market until I see some green shoots.
So that's a good point. So it seems that in your mind anyway, it's a psychology aspect. You know what your point is. You did a little bottom fishing. You knew what that point was. It broke it, and instead of doubling down or perhaps purchasing more and putting more money into what could be a poor short-term move, you just eliminated that mistake right now. So as a trader, thinking more short-term, is it one of the keys, would you say, is to exit positions as soon as it goes against your base down level or your final
well, it just depends,
level?
Right? Everybody has a different approach, but generally speaking, if you don't have a plan to what you're doing, you're just flying by the seat of your pants, and you have to accept all of the pain that comes with that, right? So when you have a plan, you know exactly what you're doing, and you're just going to say, yeah, I'm willing to make this, at some point Canopy is going to rally. And will it rally to $76? I don't think so, not in the short term, maybe later on. But the cannabis space is prone to 10, 20% rallies over a couple of days, weeks, whatever. And so you say, hey, I'm willing to put my feet in and see if this goes. And if it does, my upside is huge. But my downside, okay, like I'm down 1% on the position, I'm going to cut it.
Right.
So just managing the risk.
Now, I know a lot of our viewers know that you specialize in options trading, and with prices so low right now in weed stocks, or descending close to 40% or over 40% in the last 3 months. Are you writing puts now? Are you thinking about writing puts because the downside might be a little bit lower right now, that we've had this outsized move?
Yeah, so what I've been doing is just generally speaking, I was writing puts even before this, and on various names, a little bit on Afria, but mostly on Canopy, though that was my go-to. And when the Afria short report occurred, I covered all of my non-Afria puts, and then I managed that position differently because I was just trading around it. And so I covered a lot of those puts. Now, like you said, things have started to come in. So I have really just started writing some puts, not too aggressively. I think.
So you're kicking the tires at this point.
I'm kicking the tires.
Not all in.
Absolutely not all in. I'm kicking the tires. I think the implied volatility could be a little higher. It doesn't seem like the pricing has gone up as much as I would like it to, but yeah, if I can, for example, the puts that I'm writing are typically two-ish months out. And if I can get Canopy sub $30 for a long-term position and get paid for it, I'll do that. Generally speaking, in terms of going long on call options potentially, right now that could be a losing proposition because you don't know how long this sort of situation, downtrend is going to go. I would say watch to see the S&P and global markets really stabilize and volatility to come down. And maybe some sideways action a little bit, and at that point, I would start scouting out some positions I might want to get into, maybe leading into summer. But you also have to consider catalysts and risks that are going to be coming up in 2019, and sort of positioning yourselves around that.
Accordingly, yeah. The macro picture looks a little dicey right now. I know everybody, I think everybody agrees that growth is going to slow down in the U.S. economy and the world economy. It's just a matter of whether there's going to be a recession, how bad that would be in 2019. Now, looking forward to the first quarter of 2019, what do you see, if you pull out your crystal ball, what do you see for the market next quarter, beginning January to through March, and what do you see for weed stocks in particular? Yeah,
so just generally speaking, I mean, the global economy has actually been slowing for a long time now, probably 6 months or so. And generally speaking, the U.S. Will slow as well, I think. But you've had commodity prices come in really aggressively. It's like crude, copper, like a lot of these base metals. And that's actually somewhat of a stimulus for a lot of these economies. So I'm not as bearish on the economic picture, just generally speaking. I'm not extremely bearish, Great Recession, Great Depression type bearish, but this is more of a story about valuations. So you could have the economy still grow at 1 or 2%, and like stocks can still fall 30, 40%, no problem, without a serious recession. And that's just because valuations got really stretched. And cannabis stocks, generally speaking, are the perfect example of this.
Tip of the spear.
Tip of the spear, yeah. You're investing in one of the highest risk asset classes out there at this point. And it's like a tech stock, similar to that, where a lot of the revenues are far in the future. A lot of the opportunities 2, 3, 5 years, 10 years in the future. And the issue with that is, as cost of capital and risk tolerance goes up, right, or risk tolerance goes down, right, people are risk averse, more risk averse. They're not going to want to be in a lot of these names.
Now that being said, let me stop you there for a second.
Sorry, quarter one, quarter two, you were asking about that. So I think we have some kind of stabilization. I think it all kind of will depend on what the Fed does, and if they do back off the rate hike path, and the dollar weakens, the U.S. dollar index weakens, and generally if there's a trade deal and some stimulus that's done by China and maybe others, I think you stabilize from here potentially. And what does that mean for the cannabis stocks? I think the story is you're going to start seeing quality. So the quality is going to start moving. So for example, I think Canopy is probably the tip of that spear, to use your expression, in terms of quality outperforming the rest of the bench.
Right.
And so I think you've seen that even now. A lot of the stocks that have much more questionable business models and standings have been really falling apart because people realize if we're going, if this hype is dead, I want to have my money.
Okay. It's funny, like now that you say that, let me ask you this. Do you think there's a perception that analyst projections, revenue projections, profitability projections through 2019, full year 2020, do you think there's some investor credibility issues with that? Because we've seen some of the analysts downgrade.
So I've actually, we've spoken, I think, with James on this actually on the last program. I don't know if you watched that, but I took a look actually on analyst projections for revenues for 2019, 2020, and I think they're out to lunch, to be honest. I think their 2019, at least, is extremely aggressive, considering some of the initial numbers we've seen from OCS and this and that. It's probably like twice as, like 2x.
2x?
I think the analyst projections are 2x higher than, at least, in my opinion, than what some of these guys are going to report. And I'm talking as an aggregate. So all I did was I took the top 8 producers by market cap, and I just looked at the consensus calendar 2019, because they all have different reporting periods, right? Revenues. And I said, okay, well, how realistic is this given the pace of OCS sales and some other anecdotal information we have from the other provinces? And it's not very
Didn't quite measure up to the expectations.
No, absolutely.
Okay, so the hockey stick's a little shorter than some other analysts out there. Okay.
Yeah, just generally speaking, and I mean, I think something I'm going to do in the next couple of weeks is compare what the consensus estimate is for revenues and say how realistic is this, and if it is, maybe it's a good play because maybe some of these companies will meet that or exceed that.
Right.
But if someone exceeds it, it's market share being taken from someone else, right?
Okay, perfect. So let's end it off with your final Q1 2019 prediction for wheat stocks. Are we going up? Are we going down? Are we going sideways? I know it's a loaded question. 3 months is a long time in this market, but where do you see things going in the first quarter, looking at the March 31st?
Yeah, so just big picture, I think equity markets, there might be a little bit more downside, but I think we're through most of this move, or maybe more than half, definitely, for sure. And then as those stabilize, and as some of these valuations come in maybe a little bit further, we're talking Canopy in the low 30s or around 30. I would think that's a really, really attractive long-term entry point, given their cash balance and given the passing of the Farm Bill recently. I think the next kind of set of catalysts will be some of these Canadian, well-capitalized Canadian names potentially expanding and driving growth in the U.S. and also establishing infrastructure and distribution channels in the U.S. just based on the hemp business line. And they can piggyback off of that in the next couple of years as it gets decriminalized, deprohibited.
It's a tough word.
Yeah, sorry. And so I think those are the sort of the positive catalysts, and maybe some revenue numbers, stores, rollout in terms of that. But obviously a lot of these companies are going to miss, as we talked about, their revenue. So I think there's a lot of negative catalysts. And I'd also ask the question, if we can't rally on the news we've had in the last 2 weeks with Novartis, with Tilray, InBev,
South Korea, it's Luxembourg, you name it. There's been over a dozen. Yeah, there's been a lot.
Yeah, there's a lot of deals that have happened recently, and Farm Bill, and we're just selling at the open. So if we can't rally in a good news cycle, when are we going to rally?
Yeah.
Right? And what's going to happen when there's actually another Afria type short report, or there's some kind of other negative catalyst?
Yeah, definitely. Yeah, it's definitely been tough in that regard, and that's been one of our tells as well. The lack of catalysts really moving the market that would have sent the sector up double digits previously is not working at the present time. So, okay, Dmitry, we're going to leave it there. Thank you for joining the program. It's good to see you as always. As always, Dmitry came up with some very good insights, and there was something at the end there that sort of caught my attention. He mentioned that the potential for more short reports in the sector. And Ed, I want to lead off by asking you, do you think we're going to see more short reports in weed stocks, especially considering a lot of these stocks are already down 45%. Is it sort of taking the wind out of the sail with short reports, potentially more coming to market?
You don't need a short report to come out now because they're going down without a report. Like, if you're short, you're just sitting here, smoking cigars, drinking whiskey. And when things are going up like crazy, you never hear about the short guys getting decimated, right? But they're getting decimated. Like, I'm sure, all kinds of people got involved in the marijuana space early, started shorting it, and just got destroyed.
Yeah.
And now you're getting the opposite. And I know the long guys are saying, well, it's not fair. Listen.
The market is war, right?
The market is war. Well stated, Ben. I mean, look, there's two forces. And the good news about shorts is they got to cover. And if the market stalls here and they start to come in, you'll get a short cover rally. And it may, like you say, to your point about a counter move here, it'll be technical. It'll be the short cover rally. It won't be because they think. I've shorted for 3 years back in early 2000s, and I did okay. But it's not fun. Look, we don't know where this is going to go. Nobody can predict the future. But as long as we see fresh lows every day or fresh recent lows, there's no reason. Like, don't catch the falling knife. That's the hardest thing to do. You want to see some kind of sharp rally.
Yeah.
Like when I saw that low in October, the day I was supposed to come in, and I was sick, but I sat in a bar and had a few glasses of wine to dry me out. The rally, the late in the day, the market rallied dramatically. And you could see there was buying there. And that bottom stuck around for a couple, maybe 3, 4, 5, 6 weeks, 7 weeks.
Yeah, you make a good point because people, I think, tend to see it as a trader myself, a former full-time trader back in the day who's seen 2 market cycles and bubbles, peaks and valleys. People have a tendency of saying that this stock can't go down 20 or 30%. I'm going to buy in. So they have a tendency to think, a stock makes outsized moves either way, and then they have a tendency to go short of that without waiting for that proper confirmation, because that takes patience. That takes oftentimes several days of bottom basing, of seeing higher lows, lower highs, and people simply don't have the patience to get in. So you make a very good point. Okay, so we're going to go to Mitch Baruchowitz. He is a principal of Merida Capital Partners and a person I follow very closely on Twitter and on other channels. Mitch, welcome to the show for the first time.
Yeah, thanks for having me. I like following you on Twitter as well.
Thanks so much. Now, just getting right into the picture right now, we're going to lead off by asking you what you think of the technical damage that's taking place in weed stocks. I know you're a principal on the American side, so you focus more on U.S. MSOs, and the moves there haven't been quite as dramatic as what we've seen in Canada. But what is your big take on both sides of the border?
Well, if I was going to comment just broadly on the markets, I think one of the interesting things that's happening is you're seeing a huge destruction of value that even if stocks were overvalued going into the Canadian recreational, which is really the beginning of the downslide, the moves in stocks don't make a lot of sense given the regulatory tailwinds that now exist or the development of businesses that are now moving so quickly. When you think of whether it's a Canadian company like Canopy, who now will be harvesting every month and producing product and revenue that will be sold in stores across Canada, all the way through to whether it's Cresco Labs, Curaleaf, MedMen, all the MSOs in the United States, those are companies who have spent a tremendous amount of CapEx to develop businesses that really are just getting their feet underneath them in 2019. So the amount of revenue growth, which will be spiking in 2019, the lower CapEx expenditures as these companies hit a normal operating process, it's really baffling that the stocks are getting hit this hard. Even ancillary companies that we own, like Kush Bottles or Grow Generation, it's amazing that states can pass laws or the government can pass laws like the Farming Bill or what we think will pass in 19, the States Act, and that basically opens up entire markets for ancillary companies, whether it's lab testing or packaging or hydroponics. someone who does marketing, or all kinds of businesses that support cannabis businesses compliance. Again, another example. And it's unbelievable that these addressable markets are moving forward, and that the stocks are taking such a hit in a broad way. And I'll just make one point. It really is a new paradigm, even if it feels like the last year or two is 20 years in an economic cycle. The reality is cannabis is really early, and there's never been a substance, a service, or really anything in the history of the world that's been so used so broadly but illegal, and that's moving to a legal market. So it's not like a market that needs to be created. You essentially have substances like cannabis that are being used. It's being used hundreds of billions of dollars of a market that's going into the light. So we think that in the short term, sure, the stocks are volatile and they're going down, but long term, if you look at today and you can just fast forward to August or September of 2019, I think people will be really surprised by how large some of the revenue bases will be going forward.
So how much does the broad market weakness in general in the S&P 500, NASDAQ 100, how much does that play in your decision to invest right now and or lighten up on positions right now? Because as you know, I think a lot of viewers and investors know where the market is going, but are trying to digest, how the multi-asset compression and valuations throughout all these sectors is going to affect weed stocks and marijuana companies, because the two are inextricably tied together. So it seems to me that there's almost like the great pull of what is to come versus multi-asset compression on all sectors if we do get a recession. How do you reconcile that fact?
Well, one thing, I think a lot of people are interested in the cannabis trade primarily because it's decorrelated. Regardless of whether the NASDAQ goes up or down, cannabis companies are really not tethered to broader economic activity. That's one of the attractive parts. Having raised funds privately in Merida for the last 2.5 years, we've always been intrigued by people of high sophistication asking, well, how correlated are you to the broader market? Obviously, stocks are broadly correlated in general. If people are feeling negative about Microsoft, they may decide to lighten up on positions across the board. But cannabis, the way we invest is primarily privately. So we can ignore a little bit of the stock activity. I do think one thing we've always marveled at in the cannabis industry is the manic nature of the providers in the space, and even the public companies now, because there's so many more. This is such a rare phenomenon in the space. A year ago, there might have only been 5 or 7 different ways to play the public market. Now there's hundreds. And what you notice is that if you're at a big conference like the MJ Biz conference in November, or Benzinga that was in Toronto, I think in August, people were really excited because good news was coming out at that moment. I think in the Benzinga conference, it was August. It was right after Canopy and Constellation had announced a deal. And obviously in November, Canadian Rec had just gone live, so people were really excited. All of a sudden, stocks go down, and even if private companies continue to make great revenue, and as your guest before, Smoke Wallin, who I know pretty well, said, and by the way, it's interesting that he did it from, I think, a Chick-fil-A or something, so I'm jealous of him. But if you talk to Smoke, you'll see that the economic activity in the space is continuing apace whether or not stocks go down. In terms of the multi-asset compression you speak about, we obviously look at broader headwinds in the markets, because you just have to be cognizant of it. Especially for us, we have more than $100 million exposed to the space. So we're obviously watching those things, but we don't feel like if the economic activity of the space started to see a decline, and if we saw the compound annual growth rates dropping and pure economic activity dropping, then it would be something for concern. It's quite the opposite. Just recently, New Jersey gave out new licenses. That's a total new market, right? It's going from 6 to 12 operators. Many states, Missouri, Utah, deep red states in the United States passing medical laws. So what we try to focus on in investments is what's the opportunity. We try to ignore the short-term either headwinds or tailwinds and really focus on the impetus behind an investment we make. So it could be that it's idiosyncratic to compliance or new rules that are coming out in California, which underpin some of our investment in Steep Hill Labs, which is a large lab testing company in California. So we try to look at those specific opportunities, and we try to ignore the manic nature that everyone, the sky is falling. Because the reality is, while stocks are very painful, they really only affect traders. If you're an investor and you have a more of a long-term greedy mindset, then you're not worried about short-term moves. And in fact, this could be one of the greatest entry points going into 2019 when we think revenues will start to reflect the greater development of supply chain and the economic opportunity that people have been working towards for the last 2 to 3 years.
Mitch, Ed Milewski here. Recently, it was said that the marijuana industry was about the size of the wine industry in Canada, and I know you're in the United States. So, but the question I have is, it occurred. You talk about the marijuana companies and their market caps, and we talk about maybe a market caps of 50, 60, 70 billion, and yet the industry, they say, is about maybe 5 to 7 billion. Like, what do you think a reasonable multiple to revenues would be in this kind of a growth industry? Is that a fair question?
Oh, it's an absolutely great question. It's what we get paid to actually do by a lot of sophisticated folks in both the United States, Canada. We have investors from Australia. Really, the question, it's really hard to answer in any one specific. You have to look at the cannabis sector as a bunch of different verticals. So I'm assuming you're asking primarily on the cultivators or the operating companies who are public now. So when you look at companies like that, you really want to focus on, again, the opportunity that they're in. So if someone is in one state in the United States, then I would probably give them a much lower multiple than someone who has a broader base of diversified opportunity. But a company like Canopy or a company like Kronos or Freya, those companies are those are more global plays at this point. So when you're investing in those companies, you're investing in not only in the Canadian opportunity, but their ability to have invested smart across jurisdictions that span, and Tilray is a great example, is 12 different countries, I think, at last count. The multiples in the space probably got a little ahead of themselves because people wanted to, they almost wanted to capture the value that's going to exist today. I mean, that's the way markets are typically. A stock market, it's like a photograph. You only really know a price at that one moment. You don't get a chance to see what happened before or after. And I think because of that, a lot of people tried to position themselves as, if I buy at these levels, then things can only go up. But if you're getting so far ahead of yourself in a valuation where you're trading at 30, 40, 50 times revenue, it's hard to justify that. Long term, I mean, think of it as any normal business. You want to be able to invest at levels where the amount of cash flow and net profit can equal, in a few years. It's like buying an apartment. You're not going to pay 75 times the annual rent. You're going to pay, maybe a couple times annual rent because you want to get your money back in some reasonable period. So I think what happened, and it's actually, we're seeing the damage here, and I actually wrote about this, ironically, when Canada went rec, we wrote a short commentary that went to the market, and one of the things we pointed out is, when the rules are changing so quickly, it's really difficult to predict what valuation should or shouldn't be. And the rules are changing extremely quickly. I mean, the States Act in the United States could be a huge driving force behind value that we just won't know when that gets passed until it actually gets passed. The Farm Bill is a great example. That should be driving companies forward. All of a sudden, there's going to be millions and millions of dollars of CBD tested, of packaged. It's going to be infused into products. And so that's a huge opportunity for companies in the space to reduce their cost, to create higher CBD ratios. That's a really undiscovered fact that we don't know what that will do to multiples. So the multiples got ahead of themselves. But I think it's fair to look at a lot of these businesses as growing faster than almost any industry, if not actually any industry. And that if you're buying in companies at multiples where you feel that their growth rate and the amount of profit they can produce over a 2, 3, 4 year period justifies, with some multiple attached for growth and other things, if it justifies that, then that should be a great investment. We invest primarily in ancillary companies. We do own some growers. We think that those valuations are going to be a mixed bag, but in terms of ancillary companies, we think in many cases the ancillary companies broadly are undervalued, primarily because of the effect on the stocks that are publicly traded over the last 6 months. We're shocked that those stocks have barely moved forward, and at a time when the regulatory headwinds have become tailwinds. That you look at total addressable markets that are multiples where they were just 6 months ago, and yet those stocks have either stagnated or have gone down. And these are not usually CapEx intensive businesses, so they don't require a ton of spending either. So it's not like they're going to keep going to the market. Like, I think one of the things that's actually hurting the multi-state operators for the most part is the examples of the multi-states or of Canadian companies that really need more capital constantly, and people being fearful that if that capital has to come at lower levels, it could have a spiraling effect on their equities, which further drives down valuations. But given where these companies are and the opportunity in front of them to either be acquired by large-scale companies, as you noticed in wine or spirits, it really is, for us, we're surprised that valuations are getting this rational this quickly. And we would, if we were traders and we're not, we would potentially look to get heavy on ancillary names that have large addressable markets, because the laws as they pass really do provide an amazing foresight. Sorry about that. They provide an amazing foresight into the future, and the future for these companies, MSO, Canadian grower, or ancillary companies, is massive.
Excellent. Well, Mitch, we're going to leave it there. Great inaugural interview on Midas Letter. We hope to have you back. That was a great update.
Hey, thanks for having me, guys, and everyone. Just take heart. The stocks will look a lot better, I think, by the middle of 2019.
Terrific.
Thanks, Mitch.
All right, thanks, Mitch.
Thanks a lot. Great holiday.
Well, Mitch is a man. I don't know him that well, but he knows his stuff.
I'm gonna follow him on. Start following him on Twitter.
Terrific. Well, I'd recommend all of our viewers out there to follow Mitch on Twitter. He Merida Capital Partners, I believe, is the handle. Merida Capital, something like that. But yeah, he's a great, very knowledgeable person, obviously, and it's great to have him on the air. We hope to have him back. Now, swinging ahead to the market close, Ed, what are you seeing? Did the market finish at the lows?
You know what? I haven't looked, so I'm going to take a look. The market's now closed for the weekend, and I'm sure a lot of traders
are happy about that, right?
Are
thrilled about that.
Well, according to this, and I think this is live, the S&P was down 49 points. So 49 points. Does that sound right?
Yeah, I think so. I'm looking at Qs and SPY, so I don't actually have the actual number. I'm looking at the ETF, but I can tell you that the QQQs, NASDAQ 100 ETF, finished right at the lows of the day. You know, in the bottom 10th percentile.
Yeah. So there's a little bit of rally. I think the S&P, according to this, was down another 10 points. So it's rallied off 10 points off the low, closing at 24.19, got to 24.08. Keep in mind, at the beginning of the week, I think it was around 2,600. So we took off 200 points
in a week. That's quite substantial.
Yeah, that's
8%, 7-8%.
8%.
Yeah.
Yeah, 8%. 8%. There's not many weeks left at 8%.
No, there's not.
Of course, it's not going to work that way, but.
But going in, I think it's unfortunate that, and it happens from some years, that we have this sort of decline going into the end of the year, and it's not going to make for a very good Christmas for some investors who perhaps bought near the top, unfortunately. So I'm assuming weed stocks investors are looking for the end of the quarter and looking forward to Q1 2019 to see if we can get some sort of bounce. So a very interesting period is coming up, because if 2019 doesn't start off with a good start, then hopefully that's not portending to different to the experience going on for the rest of the quarter. But I don't know. As Mitch said, I think I'm pretty actually optimistic for Q1 2019 because we've come so far so fast. I mean, HMMJ is down 45% in this quarter.
Yeah.
In the last 3 months, it's an unbelievable move.
I just looked up the Midas Letter Big Cap Index, and I think it's well below halfway. In other words, 40, like your number, 45%. Whatever. There's a few there that are doing reasonably well, but boy, a lot of people are starting to throw in the towel, it looks like.
Yeah. There's very few stocks that have escaped this carnage. The one stock we talked about yesterday, we had a question on it, was Chiron Life Sciences. And, I believe they finished up today, which is the fourth straight day. Oh, no, they had a big sell at the end to get it down there, so about 12 cents. But that had been acting strongly. But very few stocks have escaped the carnage, unfortunately.
Yeah, I just punched up a bank stock, and I see it's down 20%. Bank of Commerce from its highs, and this is all happening. And I suspect this is a global situation. This isn't just a North American market, is it? Like
I don't think so.
I think it's happening everywhere.
It's happening everywhere.
Yeah.
You can see an export growth with a lot of companies. A lot of countries had been going down recently and at multi-year lows. So I think very few people doubt that there's a global growth slowdown going on. It's just a matter of whether the U.S. will actually get in a recession, and the U.S. seems to be stronger than most other people. So if there's a silver lining in this whole equation, if you're looking at the macro equation, recession may not be inevitable at the end of 2019, but we shall see. So now we're going to swing it to our 5 worst and best predictions of 2018. I take full responsibility as I was the initiator of this content. So let's start with the worst. Let's start there. So at number 5, the 5 worst predictions that we made this year. Number 5 is, I gave predictions earlier this year about 3 cannabis industry market scenarios in a post-Bill C-45 world. So I gave 3 predictions on what would happen upon the passage of the 3rd reading of Bill C-45. And I put this in the loss category since it was a mixed bag. The first scenario was market sentiment would feel and shift abruptly. And I think we can all agree that that's pretty much what happened. Especially after legalization actually came about on October 17th. But the second scenario, that the market would punish the stragglers, I think that also played into the effect. But of course, there's also a couple predictions that didn't come true. For example, I predicted that there would be no protracted sell the news event upon Bill C-45 passage. And obviously that's not what happened. We had a big bear market rally, fall in the summertime.
Yeah, for sure.
October 17th, actually, we had a big fall as well.
Yeah, it started to look a little weak just before the day it went legal, and then the selling's been relentless.
Yeah. Number 4. Sorry, 1 second here.
Technical difficulties. Blame the production.
Okay, number 4, worst prediction, ML's worst prediction and market calls and narratives of 2018. I predicted that Canopy Growth would skirt bear market territory and stage an encouraging rebound. So this was on the period a few days after legalization on October 17th. After it had gone down, it had entered a bear market within 4 sessions, I believe. Canopy Growth entered a bear market, and I believed that I saw signs that there could be a short-term bounce. So
right.
Everything I do is basically on the short term, try to give investors good entry points. That turned out not to be correct. The day after I wrote that article, embarrassingly enough, Canopy Growth finished down 11.2%, and then it proceeded to march down another 30% over the next few days. So that was clearly wrong. I do apologize to all our readers. I did pull off a Jim Cramer, who also said Canopy Growth was done going down. Clearly not the case, folks.
And that's our biggest cannabis company, and so it's about half of what it was at the peak. And I don't like to use the peak. I like to use like an average of 10% within the peak, because the peaks sometimes can be so short term. It's not a fair comparison.
It's hard to define.
Yeah.
Number 3, I gave a technical take on marijuana life sciences HMMJ ETF. I said that it looked heavy right before the Bill C-45 reading, and there were a couple concerns at that time. There were concerns that the government would regulate the amount of THC that could go in cannabis products. There was concerns about packaging and marketing, that they would be allowed. They were both very addressable concerns. They both did provide some headwinds to the market, but ultimately HMMJ ETF did increase about 10% from my call before falling. So because people would have been stopped out, I take full responsibility, and I'm putting that in the L column. Number two, breakout alert. Aphria is poised to move significantly higher. So that period was at the end, sometime in June. Yeah, Aphria was forming a breakout pattern. There was a clearly defined tops and bottoms stretching back into mid-May. With the market breaking up, I predicted that Aphria would follow, even though it was a laggard during that time, and that's where I went wrong. So Aphria tried a couple times to break that pattern, that flag pattern on the daily, on the hourly as well, and it failed in that attempt, and it ended up proceeded to go down about 8% over the next 4 days, and ultimately about 15 to 20% over the next few weeks. So I did miss on that one. I do apologize. And finally, the worst ML cannabis stocks narratives and calls of 2018, solely my responsibility, was Aurora Cannabis on track for reversal. And that was in the period where they purchased where they were going to close the MedRelief deal. I believe that was in July. It was immersed in 11 straight lower closes, 11 straight down days. So, and that was on a weekend article. So on Monday, it actually did go up close to 5%, and it looked pretty good, but it was all downhill from there. Eventually, it would lose another 30% over the next 15 or so sessions. So, and base at about $5.34 a share. So that was clearly not wrong, clearly a wrong call unless you sold the first day after that article appeared.
Okay, well, humble pie.
You know what? You got to take humble pie sometime, because humble pie is not everybody's going to be right all the time, and that's why we put these predictions and our calls on the website, because we want people to know that we're human. I mean, if we got everything right all the time, I probably wouldn't be hosting the show right now. I'd probably be trading somewhere, swing trading and making several $1 million a year. So we pride ourselves on getting most of the information right all the time. We think we've done a good job, and our batting average is pretty good. But we post a dirty laundry there as well, because we feel it's important that we keep a balanced representation of our work.
What's the famous expression? If you're not humble, you will stumble.
Exactly.
And we're seeing some humility here. Good.
Yeah, you have to. You have to be honest. You have to be honest. Now we are going to go. That being said, we had some bad picks, but we also had some really good picks too. And we encourage viewers to look at both articles, because we think we've had more good than bad, and our batting average is pretty good. So we're going to start with number 5. Our 5 best ML narratives and market calls of 2018. Number 5 is weed stocks remained grounded during plethora of macro catalysts. So this is a piece I wrote at the beginning of December, and with the Twitter brigade and a lot of hype surrounding the upcoming farm bill, which was agreed upon, and a whole bunch of macro catalysts, including UK legalization, South Korean legalization, New Jersey moving closer to rec sales. There's a whole plethora of them. The market was not responding. So I looked at this, and I didn't, to be honest, I wasn't too bullish on the situation, and that ended up being correct. We are still in that bear market into the end of December, and the market traded down pretty much right away, 10% within 3 days of writing that article, and now we're probably another 20% from when that article published, because nothing was acting on those catalysts. So I think that's something that we got right. Hopefully people acted accordingly. Number 4. We asked in May, I believe, is the Hydropothecary Corporation, which is now HEXO Corp, are they an ideal dance partner for Molson Coors Brewing Company? That ended up being very correct, and that was something that perhaps I got lucky on. I analyzed the situation. We knew that Molson Coors, going back into February, wanted to get into the space. It was actually in their annual report that they considered cannabis a threat to their operating model. And HEXO Corp just looked like the right fit because they're both Quebec operators, of course. And there was other aspects to it, and that ended up being dead on because no one was talking about it weeks. We talked about weeks before any rumors came out in the media. So we got that one dead on. Hopefully, people acted accordingly on that one.
Good call.
So our third best narrative and market call of 2018, we asked in October if Namaste Technologies was attempting to find a bottom at $2 a share. Now, if viewers recall, Namaste in September into October was hit by some high-profile pieces by Citron Research and Seeking Alpha. They were it was a sexy nurse scandal, if you want to call it that, or situation at that time. So there was a lot of bad PR surrounding the company. It went from all-time highs of yearly highs at $4 a share. It went all the way down to around $2. So it lost 50% of its value in about 12 sessions. So I looked at the chart. It looked like things were basing here, and at the very least, although we couldn't provide an exact direction what was going to happen, it looked like a very good call to get in. A very good swing trading call because your entries would not have lost you a lot of money if you were wrong on the call. So it's a very good risk-reward situation call, as I like to call it. It rallied pretty much right after that fact, and it returned about 57% within 4 days after I wrote the article. So that was a good one from our perspective. Do you remember that one, Ed? Or
I just put up the chart of this thing, and I know it was singled out in the Citron report, along with Kronos as being two that are.
Yeah, they went short on that.
And I got to tell you, this thing came from nowhere, not that long ago.
It's that spike there that you saw, right?
Yeah, and then look at this. Look at that support level right there.
Yeah, it's gone now.
And it bounced, and then we had the double. I call this a double top. And now we're down in here. This would say to me, at best, it's going to get back to that line, but look, it looks. I'm not that familiar with the fundamentals, but technically, and didn't it just recently drop from like $1.20 to 80 cents, something like. So that's a third of the value gone again.
Yeah, it's been weak. It's been weak lately, but anybody who received that acted on that advice, or not advice, but just on the article, received a pretty good move from that.
Yeah, and how long is long term? And you could have made a lot of money in this thing.
You can, absolutely. Now, number two, our second best market call narrative of 2018 was MedReleaf bucking cannabis sector weakness, a technical breakout possible. So that was in the late April, early May period. We noticed that the market was coming out of the spring bear market, and it was bouncing. HMMJ ETF bounced around 16%, but MedReleaf bounced about double that, bounced over 33%. Wow. So that was a tell right there, but we didn't act on it right away. It was only after the pullback where we saw that HMMJ was basing lower, and MedReleaf was hanging in there. It was actually holding. It went below one of the moving averages, I believe it was 100, and then bounced right above that. And it was above all three, the 50, 100, and 200 day. So it was acting better on the way up, and it was acting better on the retrenchment. So it ended up being correct. Within a week, I think rumors started coming in the media that MedReleaf was a bio candidate. Aurora Cannabis stepped in right away. In short order, they closed the merger, the acquisition on May 14th. So anybody who acted on that article did really well. I think it went up to about $33 a share at its height. So that was a good one on our part.
And now the best.
The best.
Drum roll, please. Drum roll, please.
So our best market call and narrative of 2018 I went with Canopy Growth Corp and the most watched technical pattern in the cannabis investing world today. Now, this one was one of those times where I don't make market calls based on technical patterns alone, but the structured nature of this one and a few other things that I was talking about in terms of volume and how it was holding up. There wasn't a lot of volume drawback during the channel, a little bit, but nothing too crazy. And a couple other factors, it lended itself, and you knew that something big was going to happen here. It was just that it was a great formation, it was too structured, and there's too many ancillary things going on to think that this wasn't going to do anything. We provided some historical context, going back to a similar pattern that it had in between November 2016 and January 2017, and as it turned out, it was dead on. Within 2 weeks, it broke up about 5% on the gap up when Canopy announced that they were going to list on the New York Stock Exchange, and within in short order, it shot up to close to $40, which was about a 45% gain from the article within like 15 trading sessions. And ultimately, it went up to close to $49 Canadian before succumbing to the summer bear market, and which ended on August 15th with that $5 billion equity stake deal with Constellation Brands. So that was something that turned out really well from our regard. Any comments, Ed?
Yeah, well, look, the stock was $2 and change, all the way up to 70 some dollars. This happened in less than 3 years.
Okay, so we're going to a feature now. Our reporters Adamo and Sean have been hard at work at this, and we're going to show you what they've been doing.
This is the very moment where I suddenly realized that the potential for vomiting on camera was a very real situation.
Put your phones down. Unless you're watching this right now on your phone, then please continue. I mean, when I look at the shirts James wears on the show, it makes me feel like I'm high. Is that cannabis fashion? I need an expert's opinion.
And as per usual with my luck, it was closed for construction.
With my luck as it was, I decided to curl up in the hole of this tree.
Would you consider using marijuana as a means of medication?
For the people that need it, they must have it. Yes, I'm in favor.
For my opinion, it should never be around.
People bug me about my name every single day.
Cannabis stocks are all over the place right now and way too hard to predict. Some may even say volatile. Now, I wouldn't say that, but that's just because I don't know what that word means.
Getting here is going to be 80 kilometers an hour.
But it's country road, so I can do 120.
Let's turn it over to the good people of Toronto for some answers. Cannabis stocks are experiencing volatility. Do you know anything about that? Why is this?
I have no idea about cannabis stocks.
Maybe almost as scary as a hairy, humanoid, ape-like creature walking through the deep bush. But I digress.
I was wondering if you sell cannabis seeds.
Yep.
Okay. And are you a licensed provider in Ontario?
No, we are not.
Oh, but you're allowed to sell them?
Well, we're continuing to sell them until they line us up against the wall and shoot us.
It's definitely not something that I do on a regular basis, if ever. So yeah, me and weed don't really get along too well.
So sorry to hear that.
What the flora? This has to be a mistake.
You can stick it in a cookie, you can stick it in pot pie, you could stick it in your if you really want to.
You know what? Let's cut that theme music. All right, let's take off the toque, take off the sunglasses, and let's talk serious for a second. It can't all be fun and games. This is some serious information.
No, I've never peeled oranges with my feet.
Now you have my DNA. Okay, so I've done my DNA test. Now we just have to wait and see for the results. I mean, if Jerry Springer taught us anything about DNA tests, I'm probably gonna be the father.
Well, there might not be any snow on the ground, but baby, it's cold outside. Am I even allowed to say that anymore?
Go down the road of using painkillers, opioids, doing whatever it takes to keep playing. Can I please stop? Nope. I just want to talk to you. 3 more? You said that already. Would you ever use marijuana as a medicine for aches and pains or anything like that?
No, not at all.
Why is that?
Because I don't need it and I would not want to try it.
Ever?
Never.
What if it was in like a cookie?
No, I refuse it.
You don't like cookies?
I like cookies, but not marijuana cookies.
I'm out in the parking lot and I'm about to get lit. That was a good haul.
Now, I don't really know why I was asked to talk about fashion. I'm still wearing the same jeans from about 12 years ago.
I'm feeling, high.
You still hadn't found those naked sunbathers, huh?
No. Where are the naked sunbathers?
Just behind the grassy knoll on the right.
Is there seriously?
Grassy knoll. No, don't do that. No.
Why?
No.
And I don't know about you, but I, for one, would rather see cannabis commercials over all these prescription drug commercials that end off in lists of hundreds of side effects, and it always ends up with anal bleeding. What's with the anal bleeding? I'm tired of the anal bleeding.
Slow? You're slow. Oh, jeez. See how I got out of that?
Be better not to get into it.
So I'm here to help give you some great cannabis-related gift ideas for this holiday season. Ed and James, if you're lucky, maybe I'll get you something along the way.
You can't be here. Don't lose them. Let's get to the party. Off you go. Go. Jessica, Sabrina. Go. Come on. We're going to be late. We want to go to the party, okay? Let's go to the party. It's going to
Please, no, don't do that. Santa. No.
Get out.
Well, it seems as though cannabis-infused products for sexual experiences is on the rise. But one question still remains. Did you enjoy this segment as much as I did? For Midas Letter Live, I'm Sean Cookson.
Good piece there.
Yeah, it was a great piece there. We want to thank everybody for watching the show. Ed, as always, it was a pleasure to host the show this time with the co-host. So thank you very much. Everybody stick around. We put together some of the show's best bloopers. Thanks for watching and happy holidays.
Here's a little treat for y'all. This is our Christmas gift to you. I'm hitting Control-Alt-Delete.
I never understand if it was pineapple or pineapple.
Pencil drumsticks. I don't even buy green bananas. I want the money now. Oh my God, I'm just a stupid animal.
When you go to a restaurant and have the turtle soup, you say, make it snappy. You give me that little monkey that...
They need their interest. Business.
I'm a businessman.
You're a business, bitch.
Are you a businessman?
What are you going to do about it?
Well, you know what? I'm not going to do anything about it.
It's not a drumstick, it's a weapon. Oop.
I'm going to speak to you in the Francais.
Let's move on from that, shall we, Edward? Okay.
Blah, blah, blah.
Okay.
Blah, blah, blah. We should have a little bar set up right here with we have like a bartender.
Why do we need a bar when we've got Suzanne? James and Ed think they're in the big time now.
Big league.
Come on, Suzanne. Bring Suzanne. Love to see that big thing down there. We don't want to be having to put diapers on the co-host here. Questions from our live studio audience. This vast live studio audience. Oh, there's no studio.
You can't get tired of people sticking it in my dupa.
Actually, I don't think we're allowed to encourage homicidal violence.
No. On that bright, cheery note, are you the little drummer boy? No. Big boy. He's a little big boy.
Yeah. The drumming old fart.
You ever notice I never go to the bathroom? I just once in a while yell out a sigh of relief. What?
We wish you a Merry Christmas. We wish you a Merry Christmas. We wish you a Merry Christmas. And a Happy New Year.